Maybank has announced that Datuk Khairussaleh Ramli has been appointed as the banking group's new president and chief executive officer effective May 1st. His appointment has been approved by Bank Negara according to the statement issued by Maybank. Khairussaleh will be taking over the helm of the country's largest bank from Datuk Sri Abdul Farid alias, whose last day will be April 30th, 2022. Previously, Abdul Farid had announced that he wouldn't be seeking an extension to his contract that was due to expire on August 1st this year. Maybank's chairman Tan Sri Zamzam Zairani Muhammad Isa welcomes Khairussaleh to its board and expresses confidence that with his almost 30 years of expertise and experience, he will be able to lead the bank in its next phase. Maybank also expressed its highest appreciation to Abdul Farid for his remarkable contributions, service and commitment in building a forward-looking organisation, especially on the digital and sustainability front. Khairussaleh had been RHB Banking Group's Group Managing Director since May 2015. He had previously served as Maybank's CFO for 3 years before heading Maybank's Indonesian operations. His other corporate sector experiences include C-level positions in Telekom Malaysia and Bursa Malaysia. Axiata Group will be acquiring a 66.03% stake in Indonesia's PT Linknet for a total cash consideration of 8.72 trillion Indonesian rupiah. In a filing with the bourse, the group says its indirect wholly owned subsidiary Axiata Investments Indonesia and PT XL Axiata have entered into a conditional share purchase agreement with Asia Link Dewa and PT First Media to acquire the 1.82 billion shares in Linknet. Upon completion of the acquisition, AII will be obligated to undertake a proposed mandatory tender offer as per the regulations of the Indonesian Financial Services Authority. AII and XL shall acquire 46.03% and 20% respectively from the combined stake of ALD and FM in Linknet. Linknet and its subsidiaries are engaged in telecommunication activities and are among the leading providers of high-speed broadband and cable TV in Indonesia, with a reach of 2.8 million homes across 23 cities with a subscriber base of approximately 860,000. Axiata President and Group CEO Datuk Izzaddin Idris says this investment is aligned with Axiata's aspiration to support digital inclusion as Asian societies and businesses accelerate digitally. Post-acquisition, Axiata says it will benefit from Linknet's strong cash flow profile and consistent dividend payouts, with increased exposure to high average revenue per user and a growing fixed broadband market. Barring unforeseen circumstances, the group expects to complete the proposal by the third quarter of 2022. Affin Bank is said to have clinched a cash deal to sell its asset management arm, Affin Asset Management. The price tag for what is arguably the banking group's crown jewel is said to be in the range of 2.3 billion to 2.6 billion cash, according to sources. Private equity fund CVC Capital Partners is among the interested parties wanting to take over Affin AM, whose asset under management has grown to 81 billion as at end 2021. Affin IB, a unit of Affin Bank, holds 63% of Affin AM, while other shareholders include Nico Asset Management International and Datuk Teng Chi Wai, who holds 3.1%. To recap, in early 2014, Affin Bank acquired Huang DBS and the asset management and futures businesses of Huang DBS for almost 1.36 billion ringgit. According to sources, it is almost a done deal and is just pending regulatory approvals. The Edge contacted Affin AM's MD Teng for comment but did not receive a reply. It is learned that Teng will not sell his entire stake and will still hold equity in the company. CVC Capital Partners declined to comment. A price tag of 2.5 billion would indicate valuations of almost 22 times earnings. For some time now, there has been talk of Affin AM undergoing an initial public offering, making it the first asset management company to be listed on Bursa Malaysia. But this did not materialize, and it is not known what has hindered the IPO plan. Again, assuming a price tag of 2.5 billion, Affin Bank is expected to receive roughly 1.57 billion from the divestment, which will come in handy to help recapitalize the bank. Lotte Chemical Titan's net profit for the fourth quarter of FY21 surged 283% to 186.8 million quarter-on-quarter, mainly due to tax income arising from reversal of tax expenses. It was enough to offset the 65% decrease in profit from operation that was due to higher feedstock costs and a current squeeze on margins. On a year-on-year basis, Lotte's net profit rose 24%. As for revenue, it improved 40% year-on-year to 2.7 billion from 1.92 billion previously, thanks to higher sales volume in its olefins, derivatives and polyolefin products. For FY21, net profit surged 612% to 1.06 billion, while revenue grew by 42.5% to 9.83 billion from the 6.9 billion posted in the previous year. This markedly improved business performance was primarily attributable to the much higher key product margin spread observed in 2021 on the back of significantly higher average product selling prices, also helping a turnaround in its US associates operations. Lotte says it will review the final dividend payable for FY21 at a later date. The group had earlier declared and paid the first ever special dividend of 18 cents per share in November 2021. Looking ahead, President and CEO Pak Kyun Chul says the company is cautiously optimistic on the petrochemical market outlook, with some balancing factors weighing on the sector. Given that its naphtha feedstock correlates with crude oil outlook, rising global crude oil price will notably be an area of concern for Lotte. On the flip side, stable demand with the easing of lockdown measures coupled with freight constraints and regional supply disruptions will lead to firm footing for the overall product prices. Westports Holdings net profit for the fourth quarter of FY21 rose 36% year-on-year to 222.9 million thanks to higher container revenue and progressive insurance reimbursement for a vessel incident in 2019. However, revenue declined 7% to 504 million from 541.4 million previously, as container throughput was adversely affected by the massive flash flood that the Klang Valley experienced late last year. Westports declared a dividend of 9.28 cents per share for the quarter. For FY21 in total, net profit improved by 23% to 808.2 million, while revenue ticked up by 2.3% to 2 billion from 1.97 billion previously. On its prospects, Westport says it is projecting a low single-digit positive container throughput for 2022. However, Westport says that this expectation comes with a note of caution, given that the pandemic is still evolving and regulatory responses abroad could indirectly affect throughput recovery trajectory. Meanwhile, Westport says it handled a container throughput of 10.40 million TEUs in 2021. Group MD Datuk Ruben Emir Nyanalingam Abdullah says, given the external economic conditions and supply chain challenges, Westports achieved a good level of profitability. Ruben says the December 2021 heavy rainfall caused severe flooding in certain areas of the Klang Valley, but there was no flooding within the terminal and all the operating equipment and essential facilities were unaffected. However, he says that Westports will remain vigilant and ensure that the terminal's operations remain unaffected by the growing risk of unusual events brought on by climate change.